everybody. Welcome into another pre-market live stream. Excuse me. Forgive me. Oh, do not know what happened right there. Okay, wrong pipe. I'm okay. Let me take a sip of water. What a way to start. Damn. Welcome in, guys. Good morning. Or evening, wherever you are in the world. Hope you guys had a great weekend. It's double time, go time. This week we have another jam-packed week. Like, seriously, guys, this week is really jam-packed. Few things on the radar. Okay, the first things first. FOMC on Wednesday. 75 basis point rate hike already baked in. Very unlikely that we get a 100 basis point rate hike or anything stupid like that. Now the question is where we go after that. And more details on that later. Other than that, we have continued earnings. Earnings calendar looks wild this week, right? A lot of big names. You have your... pretty much today... Let's see, Marriott. Tomorrow, SoFi, Uber, Pfizer, BP, Eli Lilly. This is healthcare. Felix Conoco 66. This is energy. Airbnb, AMD. Wednesday, CVS, Humana, Etsy, Marathon Oil, Robinhood, Qualcomm, Roku, a bunch of them, right? PayPal on Thursday, Moderna, Crocs, Datadog, Peloton, Nikola, Penn National, Twilio, Starbucks, Coinbase, and then Friday, Fubo, DraftKings, Duke Energy. Yeah, really big week with mainly growth names, I would say. The playbook is out for this week. I posted it just this morning. Lots of important information there. We also have a snipe list for this week. So we've already put that out there for all of our members. And yeah, it should be an interesting week. I've already shortlisted some candidates that are probably going to outperform this week. But seriously, the largest and most successful companies in the whole world missed badly, except for Apple, obviously, this past week. And this pretty much caused stocks to gap a little lower, but then the market's reaction was to rally, right? This is price action from last week. We had kind of a semi-gap down, and then boom, we went huge bullish candle on Friday close all the way to the end of the session, with Apple clinching one of its biggest intraday moves since March of this year. So it's really rare for a new bull market to start with, some of the biggest members gapping down on the index, like the way that they did this past week. And then that too, while the, US GDP is not that great neither. Economy is barely recovering. We're heading into a recession. Obviously, stock market is 6 to 8 months ahead of the economy, right? Remember, the economy is not the stock market, and the stock market is not the economy. But is this really the reversal out of a bear market? That's the question, right? That's the real golden question. And I personally don't think so. Okay, I personally don't think so. However, there will be signs that will allow us to mitigate this bias in the coming weeks. So let's kind of go through that. There are a couple of things that you should be aware of. I'm not sure if you looked at the newsletter that I posted, but the newsletter will give you a good idea where I mentioned that this week we have corporate buybacks for America, which are back, right? Just to show you the newsletter. Corporate buybacks from corporate America are going to be back this week, starting today, because they've been a blackout period for the whole month. That means that further upside prices could be supported. Okay, of course, bar that there's no erratic news or some shocks, right? CTA demand is also in a up-tape scenario right now. New temporary floor is around 3,500 on the SPX. And then we have a flurry of economic news this week. ISM manufacturing numbers, employment on Wednesday, FOMC rate decision, as I mentioned earlier, jobless claims, trade balance, and then non-farm payrolls and unemployment rate on Friday. Really, really big news stuff. Also, I spoke about the bullish scenario and the bearish scenario in the newsletter. So I hope that you've read this already. Really simple stuff. We are range bound right now on the SPX. This is likely to continue until, we break out of this range. So the upper bound of this range is 39.51. The bottom bound of this range is 37.45. A break above 39.51 send us up into 41.50. A break below, a rejection of 39.51. That means a rally up here, and rejection will send us back for support at 38.61. 38.61 is interim support. If we find support 38.61, then likely we push up into the next pivot to the upside, 39.51. So pull back, push up, pull back, then maybe rally. That's bullish scenario. Bearish scenario is pull back here, push up, reject, and then slam all the way down. That's the bearish scenario. That would complete this head and shoulders pattern that we're seeing on SPX, right? Alternatively, there could be a secondary head and shoulders formation, which is another right shoulder on 41.51. That could be another alternate scenario where 41.51 is the high of this bear market rally. So there's a lot of ways for this to play out, but the best is to recognize which one of them is going to. And that's all going to be based on what we see in the next couple of days as we head into this earnings season, the way companies are going to perform, etc., etc. One thing that sticks out and is really important for me to mention is the disparity between how SPX looks and how NASDAQ looks here. And NASDAQ has not broken out of its range yet. So tech is really, really having a tough time, right? And when I say tech, this includes disruptive stocks. Because remember, NASDAQ doesn't just, tell you about tech. It tells you about disruption in general, right? Because all the disruptive stocks are on the NASDAQ, and tech stocks happen to be the most disruptive kind. 11,670 seems to be a very, very tough zone for NASDAQ to break out of. And, it has this left shoulder here, but it's yet to make this right shoulder. And the right shoulder could be anywhere. It could, because this could be a slanted head and shoulders formation, right? So the right shoulder could come anywhere in this region, anywhere. That would still be valid for this head and shoulders pattern. So the NASDAQ is the index that is really not performing as well here compared to the S&P 500. And if you look at the top performing sectors, let's have a look at that. Last week, technology was one of the best performing to close the week off. 4% rally on Friday. Energy, of course, we've been speaking about this one for a while. Remember when I told you guys to watch energy on this rebound? It was trading here back then, and since then it's already up here at 89, and above 85 is where I told you guys I would enter longs, which I did, and we played that out, I believe last week. So we took some XLE calls that profited a little bit. I had a balanced XLE position that's I closed out in the end, and I believe I still have a few runners on XLE. And then financials here are also recovering into this upside play. This is also something I mentioned on the newsletter. So another sector to be watching here for intraday trades, but this is a pretty big impulse wave up. So definitely expect a pullback before the next wave to complete the $36 level, right? Another sector that's very bullish is healthcare. But we shouldn't get bullish on this one right now because it's approaching a big resistance, right? And a huge impulse wave to the upside. Only if we break above this 134, some 134 something, like around 134, 50, let's just say, right? Could we see more upside on healthcare? So that's one thing you got to keep note. So there are a couple of sectors, right? The first is financials. The second is tech. This is also in a bullish kind of a formation. Energy, right? Financials, healthcare. These four, right? And then we have consumer staples that also did really well last week. Actually, one of the best performing sectors. And consumer discretionary is kind of lagging here. So likely to see money rotate from all these sectors into these, right? There's a possibility that consumer discretionary catches up this week. Materials also partially lagging, and industrials saw a really nice rally last week as well. So we'll see how industrials perform this week. Communications, of course, the really problematic one, with Meta and all of the other social media stocks really getting battered down. So this one, a big gap down, hasn't been able to recover. Real estate underperforming a little bit as well, mainly, obviously, I mean, this is for obvious reasons. There's mortgage rates are super high, blah blah blah, right? And utilities also came back pretty strongly, so I'm watching utilities as well. So a lot of this money that came in from last week on these top 5 sectors may start to flow into the others, but we'll be watching closely to see which of these will see continued inflows. The VIX gapped up about 4% pre-market here, so that's something to take note of. I will be going long volatility at around 23.89, so that's a level which, if VIX comes down to, I'm comfortable with going long UVXY shares or any kind of other financial instrument to play some volatility again, since it's had its cool down. Bond market, just kind of hanging around the same place here. This is a monthly chart. It kind of dipped back up a little bit last week for a pullback, and we'll see how this continues on forward. Dollar also bounced pretty strongly this morning. That's where you're seeing the reflection of the price action in the S&P 500 this morning with this downward move so far. So far, a very shallow downward move, nothing crazy, right? So we're seeing that reflected by the dollar index here, but still, dollar index hasn't reversed into a very strong bounce just yet. So we'll see if the dollar can catch up in terms of strength, and that will be another reason, to keep the risk capped out to the upside. U.S. 10-year yield, which is the middle part of the bond market, or medium-term bonds, looking like it wants to pull back. Had pulled back, but looks like it wants to bounce. Sorry, that's what I meant to say. So there's a lot of conflicting data here, but the underlying question is if we think the bear market is over, and to me, I don't think so. I think that we still have a lot more work to do. Bulls have a lot more work to do before we can really reverse out of this, and we're gonna do it play by play as when we see confirmations. So your next key levels, I've already marked them out for you: 39.51, 41.50, pretty much, right? 41.50, 39.51, 38.60, and 37.45, pretty much. These are all your levels. The key pivot points on the S&P 500. And on the NASDAQ, remember that the levels are a little different because we are in a extenuating circumstance here. So tech is weak. Press on the other sectors, the sectors that are actually doing well. Look at McDonald's. Huge bullish close into price discovery on Friday, right? We're at all-time highs now on McDonald's. This is a stock where you could possibly pull, on a pullback, you could definitely enter this long and chase the price discovery to see where the upside would be. Just, based on a simple Fibonacci extension here, based on the previous wave, the first target's going to be 277, and then the second will be 282, and then the third will be 291. So there's quite, a bit of move here based on, where the momentum can hit us. But remember, this is a huge impulse wave, so wait for pullbacks before you enter, right? The others, let's have a look at Amazon. This is part of our snipe list this week. Big gap down on after earnings, and has been trying to really push up here. We'll see. And the market just opened right now, so I'm going to try and wrap it up here quickly. because I'm going to be trading live with the team on Discord. So Amazon simple plan here. Above this level here, the pivot 105 or 106 roughly, we could chase for the gap fill up to 110. And then after that, once it fills the gap, reverse, take the downside, try to play the downward move here back to the pivot to retest the downside. That's what I'll be looking at. So that's a few ideas for you guys. Any questions? I'll give you guys a minute. If you have any questions, post them in the comments right now, and I'll have a look at them and answer your questions right now. Watch the S&P 500 and NASDAQ today. This is so far a bull flag, so might be a continued rally after, you know, if we break out of here. So watch that closely. But other than that, I hope that you have a great trading session. We'll see you back on Wednesday for another one of these live streams, and I hope that these help you out. If not, you know, feel free to drop in the comments. I really appreciate you guys taking your time out to be here once again, and make sure that you drop a subscribe and a like if you can, because that truly helps me out. So have a great trading session, guys. All right, peace. I don't see any questions, so I'm gonna go ahead and leave this to be a short one. Take care, guys. Peace.